Well, as you heard, January producer prices printing hotter than expectations. Joining us right now on this week's inflation data and what it could mean for the Fed is former Federal Reserve Vice Chair Roger Ferguson, who is also the former president and CEO of TIAA. He's also a CNBC contributor. And Roger, what do you think? 2 days in a row, hotter than expected numbers. We all assume that means the Fed's in a little bit of a box and is not going to be able to do much of anything for the foreseeable future.
I agree with that completely, Becky. You may recall on 2 or 3 appearances ago, I said I doubted the Fed would even get off 2 rate cuts this year, as they had put into their projections, their dot plots. And I think the market and the Fed have both come to the conclusion that it's sit tight for a long period of time. They had hoped that inflation was moving gradually but steadily to the 2% target. I think that's called into question right now. It's been moving sideways and now, unfortunately, in some measures, slightly higher. So stand pat for a long period of time until there's greater clarity.
How concerned are you about this inflation and just how persistent it is?
I'm somewhat concerned about it, which is, I think, a message I've been delivering for a period of time. Some of it is structural, housing, for example, but then we find, in autos, the same thing. But to a broader picture, we're running fiscal deficits. I'm not sure that the current administration, try as they might, will be able to get that under control. Introducing tariffs doesn't necessarily have to be inflationary, but against this backdrop, it might well be. And so I am concerned that we are in a period of great uncertainty when it comes to macroeconomics, making the Fed's job very difficult.
Where do you lean just in terms of where the economy is headed? In all, it seems like a pretty decent economy. Jobs numbers haven't been concerning at all. They've been pretty strong numbers, too. Do you worry more about the economy weakening, about inflation heating up, or is it a combination of the two?
It's really a combination of the two. So I agree. The president has inherited a very strong economy. Unemployment is, roughly where we'd normally think of full employment of roughly 4%. Inflation has been coming down, but it's not at the 2% level. I think the issue now is, if the Fed is going to really try to drive inflation towards 2% against these other forces, they're going to have to really ratchet up rates maybe higher than they or anyone else would like. There's a risk that tit-for-tat tariffs may slow the global economy. So I frankly see risks on both sides, and I think it's therefore a pretty treacherous time. Inflation could well pick up. It does seem to be entrenched, and at the same time, if the macro situation isn't well handled, we could have tit-for-tat tariffs that slow the global economy, create recessions in some of our larger trading partners.
So you just said the Fed may have to ratchet up rates higher than they would like or anybody else would like. You think the next move is higher, not lower. How soon do you think that could be on the table?
I think it's going to be quite a while before that's on the table, because they are definitely going to wait to see if, in fact, the earlier disinflationary pressures come in. They have to wait to see and get some comfort around exactly how these tariffs play out. So I'm not expecting a move up in the next 2 or 3 meetings necessarily. It may never occur, by the way, if in fact inflation does cool. But I think it definitely has to be on the table as a possibility. And I think it would be unwise for them to remove that as a possibility until they get greater certainty. So I'm not suggesting that a turn towards higher rates is imminent in the March meeting or the one after that. No, I'm not suggesting that. But I am saying that at some point, if this doesn't get better, they have to be open to raising rates again, because that's part of what's called for to maintain credibility.
So how difficult is it to do that with President Trump saying that he wants to see rates lowered, saying not just to the Fed, but saying that pretty publicly? And I'm guessing you heard our last conversation. What do you think of the criticism leveled at the Fed for not doing more on the monetary front, or at the very least enabling monetary policy by expanding the balance sheet?
Look, I think the Fed got started on the inflation fight a little later than it should have, given that debate around transitory versus permanent.
You're so nice. That's such a nice way of saying that, Roger. oh, I think the Fed does.
I always try to be balanced, as you know, Joe. I think it's important to maintain a certain kind of decorum.
I want to get you drunk and just get you going, is what I'd like to and really just say it exactly like how you feel. Can we do that sometime?
Joe, we're on national TV, my friend.
We don't have to be on national TV, or fine. Maybe one of the late, we'll go on closing bell.
International, actually, Roger.
Yeah, international. Right.
International
and it's the afternoon
Joe,
over there. It's the afternoon over there.
Joe invites the former Fed vice chairman out for a couple of drinks to
somewhere.
really get wild.
Yeah, I did.
You guys know me really well. So look, very seriously. This is incredibly serious, though. This is very serious. So the Fed clearly got started late. There are lots of reasons to critique monetary and fiscal policy. We are where we are. And the new administration, with the president pushing for lower rates, I think would not be helpful. I do not think the Fed's going to listen to that. And I don't think the markets want the Fed to listen to that. No one wants this inflation genie to get out of the bottle. It's fighting hard right now. And so the sooner we get this under control, the better for everybody, including, frankly, this president. Remember, the president was elected in part because people were unhappy with inflation. He promised to bring prices down. I think that's going to be hard to deliver. But certainly he can't be reelected if inflation starts to ignite again.